Mic check one, mic check two. I am here. I am here. Now, if you're watching this live stream on the replay, take advantage of the chapters. Take advantage of the chapters and skip to the beginning of the show because I'm in setup mode and you might not want to watch this. Today was a busy day. My son graduated from the 8th grade today. So daddy was a little busy celebrating with the fam, taking them out to dinner and all that other good stuff. Came home, called myself trying to get some rest. It's been hot. Like right now, this fan is blowing on my feet instead on me. So I'm gonna have to adjust this fan. But thank you guys for tuning in tonight. Let me fix this fan real quick. So while I do that, I'm gonna give you something to look at. Just need 1 second. I'll be back in a second. All right, that's better. That's better. Oh, that fan feel great. All right, now, like I said, I'm in setup mode. You want to skip to the beginning of the show, go ahead and take advantage of the chapters. Take advantage of the chapters. Let me go ahead and set this up. So we got this. Yeah, guys, the market's been a little crazy. All of this news that's going on with this Iran stuff, people looking at the macro, them words, man. Macro news and economics and all of those things, people fall so victim to narratives. And these institutions make a killing off of us because we are always concerned with the narrative. And in my opinion, the narrative is nothing but noise. Thank you guys for tuning in. Please hit that like button and consider subscribing to the channel. I am in setup mode. I will be starting the live stream shortly. So I'm just chatting. You guys can drop something in the chat while I'm setting up and getting these websites together. But yeah, so everybody and their mama was talking about AI, right? Information technology. Everybody and their mama. Yeah, AI. And I was this weekend that just passed. And I'm so glad I shot that video because I was doing research and I was already predicting. I'm like, guys, this is a bubble. This is overvalued. Now, all of a sudden, now that the SPY and the S&P 500 index is starting to pull back. Now they changing their tune about it. Now they're admitting that it's overvalued now that the price is coming down. And just so happened, I called it right before this week started on this weekend when we did the weekly recap live. So you can go back and watch it. I talked about that sector. I talked about XLK, which is the ETF that focuses on the information technology sector. I had already called it. I had already talked about it. And all of a sudden, now the market is scaring everybody out of information technology. These earnings are coming out in the information technology sector with these big companies. And even though they're having good earnings, the stocks are still coming down. But that's because they were overvalued in the first place. That's because they were overvalued in the doggone first place. So I'm almost there, guys. I'm almost there. Just chatting with you as I get the last of these few things set up. This website that we're going to review tonight, one of them is weird. It's a little crappy in my opinion. Let me get my little water and we can go ahead and get started shortly. All right. All right. Let's see. Let me check this before we end up having prompter problems. Let me double check and make sure everybody, all these words is in here and they're not clipped off. So far, so good. It looks good. All right. Let's go ahead and get started. Let's go to the top. Bam, 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 bam. Matter of fact, I could you just do that from over here. Here we go. Oh, I need to put my my highlighter on my cursor. I'm glad I caught that. We got the charts pulled up and all that other good stuff. And then on earnings. All right, there we go. We got that going. That's the intro cam. Okay. So we go over here. Market watch. We got that right. Charts. I believe we're good. Let's go ahead. Let's go. Welcome to Market Recap Live. I am your host, Joseph Martin, and thank God, it is Wednesday, guys. It is Wednesday. I had a long, productive day. The market was nuts. I need to shave, so I'm going to take care of that tomorrow. Yeah, I had to get my rest. But let's go ahead and dive into it. Tonight, we are taking a look at ticker ORCL. You might know them better as Oracle. Oracle Corporation was founded in 1977 by Larry Ellison, Bob Miner, and Ed Oates, with the first office opening in Santa Clara, California. Now, they're publicly traded on the New York Stock Exchange and have a market value over $500 billion. Yes, that's B, billion dollars. Oracle is in the software industry in the information technology sector, and they are listed in the S&P 500 index. Some of Oracle's competitors are Microsoft Corporation, ticker MSFT, Salesforce Incorporated, ticker CRM, and CrowdStrike Holdings Incorporated, ticker CRWD. We're going to review Oracle's earnings, their website, and pull up the charts to perform a quick technical analysis. But before we do that, let's do our roll call and check our stream poll. We are streaming live on YouTube and Facebook. Let's get this chat going and tell us where you're tuning in from. Put a YT in the chat if you're tuning in from YouTube, and put a FB in the chat if you're tuning in from Facebook. While you guys are filling up the stream and the chat, here's the mission statement. We are building a community over here for people who want to take control of their financial situation by learning how to unlock the wealth building power of the stock market. And we are streaming Monday through Friday following trading sessions at 11 p.m. Eastern time. The U.S. stock market regular trading hours are 9:30 a.m. to 4 p.m. Eastern time. And there's a link for the New York Stock Exchange calendar down in the description. Okay, let's get to it. Let's get to these earnings highlights. Here we go. Got it. But the website not there. So here we go. Thank you guys for tuning in. Hit that like button and consider subscribing to the channel. Let's get these earnings going. Oracle, ticker symbol ORCL, the $578.8 billion company reported its fourth quarter earnings on Wednesday, June 10th. They have a 52-week high of $345.72, which took place on September 10th, and a 52-week low of $134.57 that occurred on April 10th, which is a trading range of $211.15. And they closed today at $201.26. Oracle earnings report beat on the top line, reporting revenue of $19.2 billion, which was higher than the market expectations of $19.1 billion, and beat on the bottom line as historical cloud infrastructure demand and massive artificial intelligence contracts accelerated operating margins. EPS was higher than the analysts and market expectations of $1.95 when they reported an adjusted EPS of $2.11. Oracle reported a GAAP net income of $4.2 billion, which is higher than the $3.4 billion net income they reported the same quarter last year. This represents an increase of 23.53%. So for the So for the fourth fiscal quarter of 2025, their net profit was approximately 19.05% lower than it is compared to now a year later. The earnings were released after the market closed, followed by a 5 p.m. Eastern Time conference call. As far as guidance, management confirmed fiscal 2027 total revenue expectations of $90 billion. That 52-week low compared to today's closing of $201.26 represents an increase of 49.56% over a span of approximately 2 months. So if someone invested $1,000 in March at that 52-week low of $134.57, they would be seeing a gain of $495.60. Okay. Whew. We got through it. All right, let's talk about why we visit these company websites. We're looking at the visuals and text to find answers to these key questions. What goods and or services does the company sell? How important are those goods and services to their customers? What makes this company stand out from the competition? And how well do they take care of their employees? We look for those answers in 4 main areas: the homepage for goods and or services, about us for purpose, vision, and mission statements, careers for employee benefits and opportunities, and investor relations for SEC filings and stock quotes. And for your convenience, all companies featured in tonight's live stream are down in the description. Now let's go visit Oracle's website. Let's check their website out. Here we go. Make sure we got the right disclaimer at the bottom. Yep. Okay, we're good. So here we go. Oracle's website. We're going to browse over this. I'm looking at the top to see if there's anything, blah, blah, blah. Nope. I don't see anything over here. Nope. All right. So let's browse over the home page. And then when we get to the bottom, I believe what we're going to click is going to be at the bottom. So just bear with me. So infrastructure, cloud, Meta Cloud, AI database, Fusion, Health Suite, Industries, Oracle Cloud Infrastructure. Building the world's largest AI cloud. So right here, they're partnered with NVIDIA. They have over 500,000 NVIDIA GPUs at this data center. That's crazy. And AI pulls a lot of power. So we can see right here, energy. So that would be the energy sector. 1.2 billion watt Texas data center. So that's what we got going on there. Now, multi-cloud AI database. Let's keep browsing. AI data platform. Cloud and customer. Okay. All OCI services, 3 racks. DHL. DHL supply chain runs on Oracle Fusion. Okay. So they're partnering with them. Health application suite. Industry specific applications. So they talk about what industries use their services: banking, construction and engineering, retail. Okay. All right. Now we're at the bottom of the website. Let me take me off the screen so you can see. So we're going to go to careers, and I do not see investor relations down here. Let's go to the top. Is there anything up here? Oracle. This is weird, guys. Normally we see the information for about us and investor relations down at the bottom or on the top of the screen, guys, and I do not see it. The only thing I see is careers. So maybe if we go to careers, it'll have all the other information we need. Okay, so let me put me back on the screen and let's just see. Oracle Careers, create the future with us. Discover your potential at a company leading the way in AI, cloud, and data center solutions that make our shared future better. Thank you guys for tuning in. Hit that like button and consider subscribing to the channel. Make a positive impact. Transform the world for the better. Grow as a person and a professional. I'm looking for the benefits, guys. Where are the benefits? Employer of choice. Apply today. Oracle Talent Network. I don't see anything that jumps out at me about the benefits. They got me ready to get off this web. There it is. Okay, we found it. Bam, we found the benefits. Okay, so let's go to benefits and see. Your benefits your way. Live life to the fullest with excellent benefits that adapt to your needs: health and well-being, family support and care, financial security, flexibility and time off. Remember, links to these websites are down in the description for you to go browse at them on your own, okay? Work we do, overview. Like I said, I don't see anything about investor relations. So I'm leaving. I'm not about to spend a lot. It shouldn't be that hard to find. There's the company. Is that it? Customer support, news and events about Oracle. Okay. Do we see investor? There it is. You mean to tell me you got to click through all this to find this, guys? So here it is. Investor relations. That's where we're going to go. Let's go there now. Man, boy, oh boy. I'm like, why would you do that? Why would you make somebody have to go through all that? You got to dig through all those tabs. Oracle investor relations, about Oracle. So now they got about Oracle over there. So we got to find investor relations and then find about Oracle. So let's go and get this information. Here's the mission statement. You see what we had to dig through to find this? Our mission is to help people see data in new ways, discovering insights, unlock endless possibilities. Oracle facts. For more than 4 decades, we've delivered innovations that have helped build entire industries. The following facts and figures highlight some of the many ways we continue to deliver innovations for our customers, partners, and communities. Okay. Now they got all of this stuff broken down instead of on the bottom of the page. So there's the careers. We just read about us with the purpose and the vision. Here's their history. So now we're getting into it. Okay. So you can browse that on your own time. I'm ready to go back to investor relations. And I'm already zoomed in. So they trade on the New York Stock Exchange. There's the ticker and the stock information. Going to browse over this page to see what else is on here. Here goes some stats, additional resources. All right, cool. Now, investor news. Is this going to be the stock information stuff? No. Let's go back. Overview, detailed chart view. We're going to click here and see what happens. Bam. There's the stock quote. And there's the chart that they have available on the website. There we go. We found it. And there's some other investor tools. I'm done. I'm done with them. Let's go. Let me share with you the research that I found out about the company, that I got about the company. So Oracle does have customers and partners that are listed in the S&P 500 index. Some notable names include AT&T Incorporated, ticker T, Cognizant Technology Solutions Corp, ticker CTSH. I have never seen this company before. That's why I'm stumbling across it. But Cognizant Technology Solutions Corporation, ticker CTSH, and NVIDIA Corporation, ticker NVDA. And since I've never heard of that company before, I'm going to pull that up real quick on the charts to see where they are in the S&P 500. Let me do that real quick, and I'm going to bring you over, and then we're going to pick back up where we were. Okay, so go here, go here, go here. Okay, so I have this list here. So I got this in alphabetical order. So the ticker was, let me take me off the screen real quick. Take me off the screen. I want to see where this is in the S&P 500. The ticker was CT. We too far down. CTSH. So they are in the S&P 500. There it is right there. Go to analyze, and that's where we can find out more about the company. So just so you can see it, since I was stumbling over it, there's the visual so you can see what it looks like. All right, now let's go back here and let's talk about this. Mobile limitations, all right? Before we look at the charts, remember, professionals trade from a computer, not a mobile device. Mobile trading apps are limited. Traders can lose critical details and advanced platform features using apps on phones instead of software on computers or websites. So keep in mind, trading from a smartphone is usually the least effective way for managing assets. To access the most details, it's best to use a full trading platform and watch these streams on a computer or TV, and only use a phone as a last resort. Now let's look at Oracle on the charts. All right, so let's go there. Let's put their ticker up. It's there, and let's put that in. So ORCL, Oracle. Let's go back to the charts. Bam. All right, so this isn't our first time looking at Oracle. I don't remember the last time we looked at them. If I guessed, what is this? What is this doing? Hold on, let me delete this. I accidentally clicked something. If I had to guess, it would be this white line right here. That was the last time we looked at Oracle. So that was around April 10th. This white line I did today, so I can remove this one. That was a technical I did today. Everything else you see, we already had did. So the 52-week high was $345.72. 52-week low was $134.57. Now, let's go back and look at the 10-year weekly chart. Oh, wow. Okay, so real quick. This area right here, support and resistance. Yeah, this is going to be like a zone to me. And I'll show you. So let's use that tool to do a zone. Here's the tool. Bam, rectangle, go here, go there, to that high. Matter of fact, to the body. Yeah, the high. We'll go to the high of this candle. Now we're going to extend this over to the right. December 1st of 2026. There we go. So that's the support and resistance zone. To see the price levels, since you can't see them when you use that tool, there's one, there's the bottom of the zone, there's the top of the zone. Spread it open. So the bottom of that support zone is $190.16. The top of that zone is $198.31. That's what that is right there. Let me put the cursor back on. So this is going to be resistance. And why did you pick that area? It's not just this one candle. So let me make sure I make that clear. It's not just this one candle that I'm looking at, okay? What's going on? What's going on? Give me a second. The mouse isn't acting right. There we go. It's not just this one candle that I'm looking at. I'm looking at the fact that it responded to it as resistance here. It was a few weekly candles that weren't able to get above that price level. But when it did, boy, oh boy, it broke through it with that weak candle right there. And that was the same week that it made the 10-year high of $345.72. Clear all that out, zoom out. Wait a minute, not that price level. Remove that price level, go here. Yeah, so that's that 10-year high of $345.72. The 10-year low, take me off the screen, $37.62. You see that right over here. So the historical price levels to where it's at right now, we're just looking at this area because this is the candle for this week. So it looked like it came down and was able to find support with that resistance zone, that support and resistance zone that we just put there. So it's going to be support because the price action is above it. Now, when we look at this is the 9-week simple moving average, this dashed green line. So I have support right here at $165.39 because of how it responded over here, these other weeks. So we really don't need to do any more technicals on the weekly chart. That's what I got. That's what I'm seeing. So we can go ahead and go to the 1-year daily chart. And now we can see that the 200-day simple moving average, it wasn't able to close above that today. So here's today's candle. This looks like an inverted hammer. Okay. That's technical analysis, candlestick talk. But that's what I'm seeing. So overall, it looks like an uptrend, and this could potentially be a pullback. Notice I said could and potentially. What I'm looking at, the fact that it closed below both the 9-day simple moving average and the 200-day simple moving average, as well as below the body of this red candle. And remember, I said we hadn't looked at this in a while. So right off the back, I'm seeing something. There was a gap that just filled. So let me show you where that was. Right here between these two candles, there was a gap. We're going to remove it. I just want to give you a visual to see what it looks like. So May, this was June 9th. So if we bring that over to June 9th, that's when that gap filled. So I didn't extend it all the way over to December 1st like I normally do. So you can see that that was the day that that gap filled. So that's no longer a gap. And now the price action opened right on top of that support zone, right on top of it, and closed slightly above it, but still below the 200-day simple moving average and the 9-day simple moving average. And I don't see another area of support if it makes it out of this zone until $165.39. Okay. Now, since we're covering Oracle, I need you to know something. Oracle has been dropping since they did their earnings after market. So we're going to go into that, and I'm going to explain a few things that I normally don't explain with this. So first, let's do the stock quote. Let's do the volume. And then we're going to talk about how it responded after the earnings were announced after market today. All right. So I'm going to go up here to my floating data box. We can remove this because that's filled. That gap was filled. Let's go cut on my floating data box. And here we go. So Oracle opened today at $198.50. They had a high of $212.48. They had a low of $198.18, and they closed today at $201.26, which was a trading range of $14.30. Now, when we look at the trading volume, guys, the earnings were announced after the market closed, so they weren't able to respond to the earnings today during the normal trading session. So we should see an increase in volume tomorrow. But today's volume was 46 million shares traded in today's session. So now we take off the floating data box. We go over here to my volume labels, take me off the screen. So the average trading volume for Oracle, guys, is 24.5 million shares in a day trading session right here. So they did almost double today and slightly above average yesterday. So yesterday, give me a second because I'm getting, oh yeah. So yesterday, Tuesday. So this was Tuesday's volume right here, 26 million. Today's volume, 46 million. So we see an increase in volume. Yesterday was slightly above average, and today was twice as much as what they usually get, just about. I'm averaging that off. Now, let's put me back on the screen. We talk about the volume rank percentile. So out of the most recent 252 trading days, only 19 of those days had higher volumes than today, days above. Now, volume rank percentile, out of those most recent 252 trading days, today's volume was higher than 92.5% of those candles, of those most recent 252 trading days volumes. Okay. Now, let's talk about how Oracle tanked on earnings. Now, this is what I talked about this weekend on the weekly recap live. The average person or retail traders think that negative news means the stock price is going to go down and positive news means that the stock price is going to go up. That's not true all the time. So the earnings were actually good. And even though the earnings were good, we can see right over here, here's the bid and the ask. They closed at $201.26 today, but now they're trading under $180 a share. So they lost $21 since the earnings announcement after hours. So we can't see that. So that means the price action is actually down here now. It's right around here at 180. So if we was to put support there, this is a slight pullback. So let me show you what that looked like. This right here is a slight pullback. So if you use the bottom of this candle as support, let me do this. If we use the bottom of that candle as support and I put a price line there, we would do that to try to see what candles responded to that price point. You see that? It responded to it over here. These day candles, these day candles. This day closed above it. The next one held it as support. This one pulled back and tested it. And this is a bullish engulfing pattern. You can look that up. And then it did the uptrend. Okay. And this is a Harami pattern. Look that up. And then that caused it to come down. Well, not caused it to come down, but those are patterns, reversal patterns as far as candlesticks. Now, let me show you what this looks like, how we can look at where the price is now on the chart. We need to use an intraday chart. So what I'm going to do, I'm going to go to a 5-day minute chart. And here is the price action now. They've actually made a low of $177.03 since the market in after hours. And if you can't see this on your charts, let me show you how to do it. Take me off the screen. We go to settings, go to equities, and right here where it says show extended hours trading session, this is what the candle, this is what the day candle is showing, this area right here. They're showing this area. This was today's trading activity. This is what the day candle is showing. Put me back on the screen. But when you add, I said put me back on the screen. What's going on? Okay. Now, when we add the extended trading hours, it's going to make its own gray area. Go to equities, hit the equities tab, cut it back on, apply. And now we can see how it responded after the earnings were announced after market. So here's a high of $212. It spiked up. You can't see that price level, so I'll put it there for you. There you go. $212.80 was the high after hours. But we can't see that on the day chart. And then they had a low of $177.03. So that's how it's performing in after hours right now. And guess what? They're in the information technology sector. And even with good earnings, what did they do? They went down. And this is what I was saying on the weekend. I believe information technology is overvalued. And institutions are going to use the high volume on these earnings to exit these positions. That's what I think they're going to do. Then we got SpaceX, if I'm not mistaken, launching this weekend on, launching Friday. And let me fact check that, and then we can move on, because I've been on this for a minute. So let me fact check that. Let me pull myself up, and I'm going to tell you what I'm doing. I'm going over to Google Gemini, and I'm going to ask, when does SpaceX IPO? And I'll pull it up on the screen so you can see it. Here we go. So you can see it. Bam. Oracle. No, we want to put like on here. There we go. And let's ask, when does SpaceX IPO? Let's get that answer. I believe it's this Friday. I don't see a specific date. Where did I get Friday from? While an exact date, there it is. An exact date for the initial public offering IPO has not been finalized. The company is preparing for a potential listing this year, making it one of three anticipated mega IPOs alongside major AI firms. Okay, where did I get that from? See, that's why you got to fact check this stuff, man. I could have sworn I heard somebody say that it was IPOing this Friday. But anyway, neither here nor there. Let's go ahead and move on. I'm glad I fact checked it before I said something that wasn't true. Rather do that. Make sure I'm right than be wrong and just keep talking. So we got it. So back to the community. I would appreciate it very much if you guys share the stream, hit the like button, subscribe. And if you wish to send a monetary gift to support the content, Cash App and PayPal links are down in the description, as well as the ticker on the screen. Now, let's talk about this. Let's look at what the S&P 500 index did today by using the SPY ETF. This ETF gives investors an opportunity to participate in the broader U.S. market by allowing them to own a percentage of each company in the S&P 500 index. All right, let's pull them up on the charts. Bam, bam. All right, let's go back to the 1-year daily chart. Put the SPY ticker on the screen. Go up here to the symbol box and let's type in SPY, S-P-Y. Okay, guys. SPY is tearing people up. It's tearing people up, boy. And I called it. I said, I'm concerned. These highs they keep making on low volume. I talked about it in extensive detail on our weekly recap live, so you can go back and watch that. So they have a 52-week low of $591.89, 52-week high of $760.40. Okay, let's zoom in and focus on where we are right now. So here is today's candle. Put me back on the screen. Today's big red candle right here, this one. Okay, and I said that this candle right here still looked bearish to me yesterday, despite this long wick that it had. So this long wick gives bullish implications. But what I was saying that made it still look bearish was the fact that it closed. Now these arrows are acting funny. it closed. The bottom of this red candle right here, let me use a different tool. Delete that. The bottom of this red candle, the bottom of it, so right here, this close was below all of these candles. So everything above this line, people that had long positions where they wanted the stock to go up, they were all losing with that close yesterday right here. But this long wick gave the illusion that it was a bullish move because of how much it recovered. But I was looking at the volume and I seen that it recovered, and it really wasn't like crazy volume or something like that. It was a little bit above average, but it still gave off more bearish vibe than bullish. The bullish vibe was just this long wick. And I said it still looked extremely bearish to me. I said it yesterday. And then today it opened below the close of yesterday. So that's right here. This was the open. During the trading session, it came up and tested, but it got above it, but tested that previous support that's now acting as resistance at $737.05. Then it came all the way down. It had already did the gap fill from this long wick here because you had a gap between these two candles over here. So yesterday, this long wick filled that gap, but today it came all the way down, and now it's just about to test this support zone that I put on a chart not too long ago. And we can't see the price levels of that zone, so I'll open that up so you can see it. So if I go to edit properties, here they are. So here is the bottom of that zone is $723.77. The top of that zone is $725.04. I'm gonna say that again because I stumbled over it. The bottom of that support zone is $723.77. The top of that support zone is $725.04. Got it. All right, take this off. We're looking at the SPY. Click OK. All right. So let's get the quote for the SPY ETF. I'm talking like that because I'm trying to make sure, buying myself some time to make sure I didn't miss anything. I didn't mention this. So it's still trading below, well below the 9-day simple moving average, and it's trading well above the 200-day simple moving average. So we covered that. Zoom back in, get this where we need to be, and then we will do the ETF quote. All right. Just try to fit these in here as much as possible. That's good enough. All right. So I'm opening up my floating data box and let's get this quote for this ETF. So the SPY opened today at $733.39. They had a high of $738.38. They had a low of $725.33. And they closed today at $725.43, which was a trading range of $13.05. Now, when we look at the trading volume, they traded 60 million shares of this ETF today. So they are still, so this is actually below average volume on this red candle. And we'll talk about that. Okay, so let me cut the floating data box off and let's go to my volume labels and talk about this volume. So take me off the screen. Now, when we go over here, average trading volume for the SPY in a daily trading session is 74 million shares. Today, they traded 60 million, so that's below average. Now, we also want to look at the previous volume. So this candle right here was the day with this previous volume. So they traded 87 million shares on that red candle that I just pointed at. Now, today's volume, this candle, was the 60 million. So we can see a decrease in volume as the ETF is continuing to the downside. Okay. And today was below average as well. So now put me back on the screen and let's talk about the volume rank percentile. So out of the most recent 252 trading days, only 70 of those days had lower volume than today. So looking at it like that, now we need to look at the volume rank percentile. So this will tell us how low this volume is compared to the most recent 252 trading days. And the volume rank percentile is only 27.8%. So that means today's volume is higher than only 27.8% of those most recent 252 trading days volume. All right. Okay, guys, bam, we're done with the SPY. We did our technicals. Let's move on. Now, let's look at the S&P 500 biggest gainer and loser of the day. But first, we're going to look at the loser so we can end the night on a high note. So let's go back to the charts and let's pull up the biggest loser. Let's go to the Market Watch tab. We had moved this around looking at that company I had never heard of before. Percentage change, bam. So the biggest loser for today is ticker SMCI. SMCI is the biggest loser for today, Super Micro Computer Incorporated, okay? They lost 27.98% today. Ooh wee. Guys, that's crazy. They had a big loss today. So their previous close was $40.64. And then they had the nerve to close today at $29.27. Oh my gosh. They lost more than a quarter of their value overnight. And I'm not surprised. They caught me in a trade like that. They end up losing a third of their value overnight in a position I had. This company is going through some crazy stuff. They got some volatility over there. They were just trading at $50 not too long ago. But let's talk about this. We'll go to the charts, look at their website, and move on. So their previous close, we talked about the close today. Let's do a hypothetical. So let's say if somebody had invested, let's use a bigger number, $9,800. Somebody had invested $98 and they suffered that 27.98% loss. So we negate that, turn it into a decimal, equal, they would have lost $2,742.04. We add the $9,800 principal back to it. They would be left with $7,057.96. Bada boom, bada bing. Got it. Now let's go over to the Analyze tab. SMCI is in the information technology sector. So what we want to do, we want to see how that sector is performing today. So let's go back to the Market Watch tab. Then we're going to go over to the Visualize sub tab. And then we're going to go to the information technology sector in the S&P 500 index. Now, I found out about this trick yesterday on the ThinkOrSwim platform. Let me put the right disclaimer up here. Here we go. So you know what platform I'm using. I'm using the ThinkOrSwim platform. Take me off the screen. If you hold down the shift button and not click. Well, what did we just do? Hold on a second. Let's go back and figure out how we do this. There you go. So if I hit the shift button, it'll highlight that actual sector as I mouse over it. You see that? So this information technology, that's communication services. This is financials. So we want the information technology. So all we have to do is click on that now that we have it highlighted and it'll zoom in. So now if we do it again, it's going to break it down into the different industries. See that? So now this is the semiconductors industry, software industry, technology. It breaks it down for you. So this is something that I learned recently that makes this a lot easier. So where is SMCI? That's what we're looking for. SMCI. I don't see them in this one. So is it software? No. It should be over here. It should be over here. Storage and peripherals. Yeah, it should be over here. There we go. It's down here. It's really small, guys. It's down here in the corner. Very small, but that's where they are. So they are in the information technology sector, and then they're in the technology, hardware, storage, and peripherals industry. And we can see that this was tough today. The only companies that did okay looks like was Apple, and SanDisk still lost. But for the most part, this industry lost money today. They lost value in the information technology sector and in the technology, hardware, storage, and peripherals industry. Okay, let's go back to the Analyze tab. Let's talk about this company. So Super Micro Computer Incorporated, here's their website. Their website is also down in the description for your convenience. I'm going to read a little bit of this and we're going to go to the website. Super Micro Computer Incorporated, together with its subsidiaries, develops and sells server and storage solutions based on modular and open standard architecture in the United States, Asia, Europe, and internationally. Bada boom, bada bing. Put me back on the screen and let's go to their website. Here we go. Bam. Hopefully they won't put us through the flux like they did when we were looking at Oracle. My mouth is dry. So we're going to browse over this home page. And I'm going to show you where we're going to go when we get down to the bottom, because I believe where they have company at the top. So we got company. There we go. So we're going to go to About Us, Careers, and Investor Relations. They have it right there at the top. So let's browse up the homepage, and then we'll go to those locations. NVIDIA Blackwell Ultra Systems now shipping. Supermicro NVIDIA, learn more. Then we can, there you go. CEO keynote, Computex 2026. Supermicro data center building block solutions. Supermicro ready to deploy Gold Series servers. All right, let's keep browsing. Data center building block solutions, DCBBS. Don't know what all that stands for. I will go to AI and ask, hey, what's this? Got to find out what this is. Building blocks, motherboards, networking, chassis, accessories. Okay, rack and integration deployment. Here's some videos. Link down in the description for you to check this out. Guys, this is a lot of stuff. Data center, data center, data center. That's what I'm getting. Data center, NVIDIA. Custom data center racks. That's what I'm getting. Okay, down here at the bottom, take me off the screen so you can see this. About Us, company profile, investor relations, and careers. They have it down at the bottom as well. So let's go to company profile. Make sure we're zoomed in. Yeah, we're good. The key to success in technology is designing a company around people committed to work that they love. Okay. Company profile. Got it. Supermicro is a global technology leader committed to delivering first-to-market innovation for AI, cloud storage, 5G, edge, IT infrastructure. We are a rack-scale total IT solutions provider that designs and builds an environmentally friendly, energy-efficient range of server storage systems and switches. All right, first-to-market innovation, total solutions, we keep it green, U.S.-based engineering and manufacturing, corporate overview. Okay, founded and headquartered in the USA, 22 billion revenue, fiscal year 2025, Fortune 500, ranked among the Fortune 500 companies. Got it. Milestones. So these are some accomplishments they've had: green computing, leadership. Got it. So let's move on to careers and find out about them benefits. Where the benefits at? How y'all take care of the employees? Help drive the future of Supermicro. Search jobs, accelerate your career. Supermicro is listed on the Fortune magazine's list of largest U.S. corporations and is on the Standard & Poor's S&P 500 index. Yes, they are, which tracks 500 of the most valuable companies traded on the U.S. stock exchange. Got it. They want to make sure you know what our values are. Supermicro places significant emphasis continuously improving customer satisfaction and green computing. All right, what makes us unique? Headquartered in Silicon Valley, Supermicro evolved from a small subsystem company into a total systems enterprise. Got it. World-class culture and benefits. Here we go. Learn more. I'm gonna browse over this, and I'm thinking that's right where the benefits are. So we're gonna go back there. Just browsing so you can see it. Event spotlight, we're down at the bottom. All right, let's go back there where it says learn more. Bam. Explore our benefits. Take me off the screen so you can read them real quick. It looks like they made this smaller. Yeah, they did. So here we go. Explore our benefits. Your talent drives Supermicro's success and makes this a great place to work. We provide comprehensive benefits from day one for eligible employees, their dependents, and domestic partners. Okay. Guys, that's all. I'm not going to read all of that, but hey, there it go. They broke it down. Now we're going to go to investor relations. Here's another one, says our benefits. That's the same page. All right, so let's go back to Supermicro. No, they're not taking us back. Back. Where's investor relations? Here we go. Company, investor relations, right here. I knew. Okay, we're good. Put me back on the screen. There we go. So we got it. Here's the stock information over here to the right. Total IT solutions for AI cloud. We're going to browse over this page, and then we're going to look for the stock quote and charts that they have, if they have any available. So at the top, here it is: stock information, stock details, and analyst coverage. So let's go to stock details. There we go. Here's the stock quote. Here's the stock chart. Here's some other tools that they have. Oh gosh, good. All right, let's move on and get to the research that I got about the company. SMCI, got it. Trading platform shown. No, let's do this. Here we go. All right. Supermicro Computer Incorporated, ticker SMCI. When it comes to their goods and services, they manage high-tech performance server and storage architectures across the enterprise, cloud, and artificial intelligence data center markets, offering solutions such as complete liquid-cooled server solutions like rack-scale computing clusters and optimized hardware architectures that power massive artificial intelligence model training and complex deep learning. Scalable data center storage products, including enterprise flash arrays, high-density storage servers, and software-defined storage architectures for large-scale data retention and cloud service providers, and a modular building block computing setups tailored for high-volume custom workstations, fabrication, edge computing, and global corporate network infrastructures. Looking at their S&P 500 customers and partners, notable names include NVIDIA Corporation, ticker NVDA, Advanced Micro Devices Incorporated, ticker AMD, and Intel Corporation, ticker INTC. Now, let's go to the charts. Oh, my mouth is dry. Here we go. We're on the charts, SMCI. Now, we've looked at them before, so we got a mess over here. We got a mess. So what we're going to do, we're going to clean some of this up as we go over it. So here we go. Their 52-week high is $62.36. 52-week low, $19.48. Okay, this is where I got shook out at. Here was that 30%, that 33% drop, that 1/3. It went from over $30 down to like $19 overnight. They had some type of scandal about a high up, a director, somebody important in the company, supposedly or accused of smuggling chips over into China that they weren't supposed to be doing. So the company ended up losing 1/3 of its value overnight. Shook me out the trade. And then since then, from that low to that high of over $50, it had a high of $51.40. That was 163%, over 163% gain from that low to that high. And what I was looking at was this consolidation right here. It was consolidating for a while. So after consolidation, it's either going to break to the upside or it's going to break to the downside. They had a negative catalyst. It broke to the downside first. And then after it broke to the downside, that's when it broke to the upside. And that was when it presented the over 150% opportunity. Yeah. So this gap right here, because you know we make the gaps yellow on this channel, that has been filled since then. So we'll remove that gap. This gap hasn't been filled all the way, but we'll talk about that in a second. Let's go back and look at the 10-year weekly chart and talk about this. So their 10-year low, take me off the screen, is 85 cents. Are you serious? Wow. The 10-year low is 85 cents. Their 10-year high is $122.90. I'm scared to show what that percentage gain is. I probably won't even be able to read it if I do it, because that's going to be huge. All right. So let's zoom in. We see some consolidation over here. And now remember, we're looking at weekly candles. So it was some consolidation over here. I'll bring it over to show what I'm talking about, so you can get this consolidation idea. So consolidation, what is consolidation? Basically trending sideways in a tight range. And it's either going to break to the upside or the downside. And as we can see, it broke to the upside. So erase that. Bam. And then that's when it hit that 10-year high of $122.90. Okay. Now let's go over here. And this is what we want to focus on. Since the price came all the way back down here, we're focused on doing our technicals on the 1-year daily chart. And that's where we are now. We don't need to go back here because we have a nice amount of data here with price action. So let's zoom in on that area. Let's zoom in on that area right here. Spread this open a little bit as needed. And immediately I can see that there was a few gaps that we didn't cover because we haven't been looking at SMCI, right? It hasn't been on here for a while. So the first thing we want to do, we're going to put this gap here. So we have a gap that happened today. This is yesterday's candle. This is today's candle. And also, they haven't had earnings. This wasn't even on earnings. They having these crazy moves, and they didn't even have earnings. So maybe it was some type of news catalyst So we haven't done that before, but I'm gonna show you how to do it on the ThinkOrSwim platform. So let's extend this over to December 1st. Put me back on the screen. Let's extend this over to December 1st. Bam, 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 bam. December 1st. There's our gap. Okay. There was a gap here. We're not going to put it there, but it was filled on this candle right here. There was a gap between these two. This candle filled it. Okay. Now this is a Harami pattern, these two candles. But then it ended up having a bearish engulfing pattern right after the Harami. So the Harami was a reversal pattern that meant the trend should change. So the trend was a short-term down. So this either means sideways. It could continue down, but that's a pattern that's supposed to be recognized as a reversal, the Harami pattern, these two candles. But then these two candles form the bearish engulfing pattern. And the wick came down crazy, like the wick came down on the spot that we talked about earlier. Look at this long wick on this candle. And when that wick came down, it tested this area as support. So if you don't recognize that, let me show you what I'm seeing as support here, which happens to be the top of this gap. The top of this candle, so the high on this candle and like the open on this green candle, they look like they're about the same. So if I put let's take these arrows and stuff off and go back here. So if I put a price level here on top of that high on May 26th, that's near the top of that gap. It's not perfect, but it's near the top of that gap. And that's what I would have seen as a support or potential resistance. And that's what it came down to test on June 9th. And then today it gapped down by opening here. It opened right here on the top of the body of this red candle. Came up past the 200-day simple moving average. And it wasn't able to close that gap. It wasn't anything to test but this 200-day simple moving average. But that gap is still there. So now that the bottom of that gap is going to be resistance and the top of that gap. Okay. So let me open that up so you can see it. Those are the price levels. The top is $38.04. The bottom is $36.51. That's that gap zone. Now, we had a lot of different support levels over here, and it broke through all of them in one day. It closed below all of them. So we had 34.94. We had 33.64. We had 31.12. We had 29.79 and closed below all of them. And then this area, you see this gap over here that we drew. I'm thinking because it stopped right here, I should have extended it all the way over to December. But this gap is partially filled. This is the lowest it's been. So this low of this candle. So let me show you what we're going to do. The low on the candle that I'm moused over is $29.14. So let's go here. $29.14. So that's going to be the top. $29.14. That's going to be the top of that gap now. Now we're going to extend that over to December 1st. So now when we go over to December 1st, we can see how we did that? So that gap from back here is still not filled all the way. That gap hasn't been filled. And that's from this candle right here on May 5th. So from May 5th to May 6th, that was the gap. But this price action came down. These candles came down and filled some of it. But this filled even more of it. But it's still not filled all the way. So this is going to be a support and resistance zone. And here are the price levels for that so you can see them. The top of the zone is $29.14. The bottom of the gap, not zone. The top of the gap is $29.14. Bottom of the gap is $28.29. I know that's a lot of technicals, guys, but I wanted to make sure I got all of it out. That's what I'm seeing. Let me back this up a little bit. Yeah. So this still looks bearish to me. If it recover some of it, I'll be surprised because there's some other things that's going on. We didn't look at what might be going on in the news about this. So let me show you how to do that. If we take me off the screen and we go over here and extend this. Now I don't think we've ever done this before. Right here. This is where we would get those. Let me close that. All right. So this is where we would get the news about this stock, Supermicro, that's offered by the ThinkOrSwim platform. Okay. So it says 610. So this was news yesterday. None of, oh yeah. Are we after 12? We after 12. So this was today's news. So they're trying to explain why the price is going down. Supermicro Incorporated stock shares 28% underperforms peers. So I'm guessing these are going to try to explain what happened. Look at how many pieces of news they got on it today. Look at that, 16, 16, 16. This is what I mean by people and narratives. You see how many pieces, how much news you need? 1, 2, 3, 4, 5, 6, 7, 8. Man, look at all that news. Which one is talking about the actual percentage? This one. So if we open that one, here's the piece of news that shows up. So they try to explain to the traders why it's doing what it's doing. Now, with the overall market seeming like it's in fear, so if you don't know how to look at that, that's going to be the VIX. So that's something I never talked about before. The VIX is also on my chart already, so I don't have to go look it up. So let me show you what that is. Come on, put me back on the screen. All right, right here, VIX. So the VIX percentile is 88%. I don't have the actual price levels here. I just use the percentage because that lets me know how high the VIX is compared to the other days it's been at certain price levels. So this isn't volume, this is price. So it's in the 88th percentile of price in the most recent 252 trading days. So I've never broke this down before. So this is my first time giving you this game. So over here, VIX, this is the price level it's at right now, $22.22. So the VIX is like a fear index. The higher the VIX is, the more fear is in the market. So if you go up here to the symbol box, VIX, here's that volatility. Chicago Board of Exchange market volatility. So they call it the volatility index right here. You can see that. Let me highlight this for you right here. CBOE market volatility. And CBOE is actually a ticker and a stock someone can invest in. If you put the ticker in over here, COBE, COBE, COBE. Wait a minute. Did I do something wrong? Give me a second. Give me a second. VIX, CBOE. I spelled it wrong. CBOE. There they are. They're actually a S&P 500 listed company. CBOE Global Markets Incorporated. So this company offers that VIX and the SPX. So the S&P 500 index that we look at, this company takes care of that, SPX. They offer this and they offer the VIX, VIX. So that's a volatility index. So the higher this gets, this gauges the fear in the market. So usually when there's more fear in the market, you see more selling pressure. You see the leaders start declining because people are afraid. And then you see almost cussed, a ton of stories. You saw that news thing I showed you. How many? Come on now. When we looked at SMCI, how many stories do you need for the day? They start flooding the market just with a whole bunch of negative news to get people to sell, 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 sell. And then you see blood all through the market. Like when we go and we look at the visualize tab and we go to all watch list indices, S&P 500. So since this sector was hot, it's more red. Just blood, just blood. We go to the SPY, which we looked at earlier, just one more time. We all over the place at this point. Red. And I mean coming down convincingly, knocking all these people out. All these people are losing if they're in long positions or trying to profit to the upside because the price all the way down here. Drag this over. All these people are trapped. That's above this price level. All these people. Okay. So where were we? We were at SMCI. I don't even remember if we finished. We were talking about I ended up telling you about the VIX. And I don't know if we finished the volume. I don't think we did. So let's go ahead and do the stock quote for SMCI. Because we got the technicals done. And I went on a rant about the VIX. So let me cut my floating data box on and talk about the VIX. So not the VIX, SMCI. Oh gosh. So SMCI opened at $35.60. They had a high of $36.51. They had a low of $29.14. They closed today at $29.27, which was a trading range of $7.37. Oh gosh, the trading volume is nuts, guys. They traded 191 million shares of this stock today. This is one of those instances where I'm telling you volume matters. It's not just the candle itself. What's the volume of the move behind it? People did not agree that it was supposed to be trading what it was trading at. And they were selling on the bid. That's extreme selling pressure. And a lot of people that was like, nope, got to get rid of it. Nope, it need to come down. Nope, nope, nope. So let me take me off the screen. Let's talk about the rest of the volume. Take the floating data box off. Now, when we come over here to my volume labels, we can see how significant this is. The average trading volume for SMCI in a daily trading session, guys, is 35 million. It's only 35 million shares traded in a daily trading session. And they did 191 million. I got to break out the calculator. Let's clear this out. 191. 123, 123. I'm rounding it off. Divided by this 35. 35, 123, 123 equals. That's 5.4. Let's say 5.5. That's 5.5 times what it normally trades. Just today. That's nuts. Yesterday's volume was above average as well, but that was this red candle, okay? So this red candle had 51 million shares traded. But this candle that gapped down, that's the one that had the 191 million. That's today's. Now these candles, so this is, I gotta breathe. This is Monday, Tuesday, Wednesday. So these three candles make up this week's candle so far. So if we go back and look at the 10-year weekly chart, now we can see what this week's candle looks like so far. It's this big, crazy red candle right there. That's this week's candle so far. Look how many weeks of profits, if somebody had a long position, it just took out. This red candle right here, this is the week's candle. So this week, everybody in this week is losing. This week, this week, this week, and part of this week. All those people in the last few weeks and everybody that bought up in here is losing because this is where it closed at, right down here at the bottom. So all these people are trapped if they're in positions that profit to the upside. Oh, guys, that's nuts. That is nuts. Okay. All right. So let's finish talking about this volume on the 1 year. All right, we talked about the volume with that, blah, 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 blah. All right, the volume rank percentile. Let's put me back up on the screen. So out of the most recent 252 trading days, guys, only one of those days, and I would be, what day was that? Had higher volume than today. Was that, you know what? I think I know what day that was. That was the day that it lost the third, of the volume, this one. Yep, you see, so you don't know where to look. The volume is right here. I'm gonna point to it. Look at this volume when I mouse over it. So I'm about to mouse over this candle right here. This red candle. See the volume? That's the day that had higher volume because the volume rank percentile was telling you only one day had higher volume than that. That was the gap down where they lost a third overnight that I was talking about. So they traded 242 million shares that day. Just on that one red candle. Now notice that candle is smaller than that candle, but that candle has more volume in it. Okay? This candle has more volume than that candle. So the size of the candle doesn't tell you how many people traded in it or how many shares were traded in it. The volume is different from the actual size of the candle. That's why it factors in. Okay? That's nuts. All right. So the volume rank percentile was 99.6%, which means that today's volume was only higher than 99.6% of the most recent 252 trading days. I'm about to drink this whole bottle of water. We spent a lot of time on SMCI. All right, let's move on. Let's go to the gainer for today. Let's go to the gainer. So we're going to go over here to the Market Watch tab, get out of this Visualize tab. I'm going to reset this before we go. Go over to quotes, go to positive. Okay, so the winner for today, the gainer for today, the S&P 500 gainer is ticker DVN, Devon Energy Incorporated. I hope I'm pronouncing that right. All right. So their previous close was $44.07. They closed today at $46.60, and they had a gain of 5.74%. Let's do a hypothetical. Let's say somebody invested $5,500 times the 5.74% gain, 0.74%. So they gained $315.70. Add the $5,500 back to it, 5500. Total investment would have grown to $5,815.70. Bada boom, bada bing. Now we go over to the Analyze tab. I'm gonna move a little bit faster because we spent a lot of time on SMCI. DVN, ticker DVN, Devon Energy Corporation, is in the energy sector. So we're going to go over to the Market Watch tab. Then we're going to go to the Visualize sub tab. We're already in the S&P 500 index. So now we are looking for the energy sector. Hit the select button, not select, shift button and mouse over to find the energy sector. There it is. So click on it. We're in the energy sector. Now we're looking for DVN, ticker DVN, DVN. Where are they? There they are, right up here. Man, if it was a snake, it bit me. Right up here at the top. So now we're going to break this down into industries. So it's the oil, gas, and consumable fuels industry. We click on that. So that's the oil, gas, exploration, and production sub-industry. I like this new feature with holding down shift. I wish I had known about that sooner. It makes it a lot easier to break these down. So it's inside the energy sector. It's inside the energy, right? The energy sector is inside the oil, gas, and consumable fuels industry. And then it's inside the oil, gas, and exploration and production sub-industry. Okay, now let's go back over to the Analyze tab and read details about the company so we can go over to their website. Here we go. Here's their website. Links are in the description for your convenience. Devon Energy Corporation, an independent energy company, engages in the exploration, development, and production of oil, natural gas, and natural gas liquids in the United States. Okay, cool. Now let's go to their website. Now, this is what I was talking about their website look a little weird to me. That's like one of the weirdest most basic websites I've ever seen. Is it? Maybe second. We seen maybe one or two that was like really, really basic. Okay, so we're gonna go to About Us, we're gonna go to Investors, and we're gonna go to Careers. What I like about it is simple, and everything we need is right there at the front. So I commend them for that. This was better than Oracle's. So let's go ahead and move on. So here's the ticker information over here, the stock quote information on their main page. It looks like we can go here and look at a chart or whatever, but that's cool. That's right there on the home page. Remember, links to their website are down in the description, which is going to browse through this home page. I was moving a little bit too fast. Updated 2026 outlook, Permian federal lease sale, Devon and Coterra complete merger, capital return update, Q1 results and outlook, 2025 sustainability report. All right, so let's browse over this, and then we're going to click on those other sections I said we're going to look at. Yeah, we're zoomed in 150%. Guys, we at the bottom of the page. They had a very short website. Thank gosh. All right, let's go to About Us. So here we are at About Us. Zoom in. We good. About Us overview. Devon Energy is a leading independent oil and natural gas exploration and production company. Devon's operations are focused onshore in the United States. Purpose, energizing modern life. Boy, they straight to the point, ain't they? They made it simple and easy to find. You can't see how short this is because I'm blocking it. There it is. That's their purpose. 3 words. Got it. Let's move on. All right. Let's go to careers and see if we can find the benefits. Careers, extraordinary people. Learn more. Working at Devon. We employ professionals, champion integrity, and perform our jobs in a safe and responsible manner. View open jobs. Sign up now. Fraudulent job offers. Guys, I've seen this multiple times. People scamming jobs now. Is that a thing? I've seen this on a few websites. People scamming jobs. Compensation and benefits. That's where we want to go. So we're at the bottom of the page. Let's go there. Bam. Compensation and benefits. Devon offers every employee a competitive compensation package consisting of base pay. Look, this is very generic. This is very generic. It's very basic. That's what I'm getting from this. And we can move on. They don't go into many details about it. That's very vague. So let's go ahead and go to investors. Look how tiny this is. Let me zoom in. I know they zoomed us out. Yep. All right. So we're zoomed in now. I'm going to scroll over this page. This page is a little longer than the other ones. Okay. So that's the bottom. Now we're going to go back over here and go to more stock information. Got it. So here's the stock quote. Here's the chart that they offer on their website. We're done. Let's go over here and go to my research that I found out about the company. So Devon Energy Corporation, ticker DVN, when it comes to their goods and services, they manage large-scale oil and gas exploration and production operations across the premier onshore unconventional basins in the United States, offering solutions such as high-volume crude oil extraction solutions like horizontal drilling projects and optimized multi-well pad architectures that power domestic energy production and complex refining, scalable natural gas liquids processing products, including gathering pipelines, cryogenic processing systems, and regional supply chain networks for large-scale energy distribution and utility providers, and production field setups tailored for high-volume safe fluid management, environmental compliance systems, and global corporate industrial networks. Looking at their S&P 500 customers and partners, notable names include Marathon Petroleum Corporation, ticker MPC, Valero Energy Corporation, ticker VLO, and Phillips 66, ticker PSX. All right, now let's go to the charts, and here we go. Let's go to the charts. What you doing? There we go. All right, so we're on the charts. Put the ThinkOrSwim disclaimer up. There we go. All right, go to the charts. Now, we've never looked at this company before, so we're about to do some fresh technicals. All right, so let's take me off the screen. Here's their 52-week low of $31.45. Here's their 52-week high of $52.71. All right. They do pay a dividend. So it looks like they've increased their dividend, because over here it's 32 cents. And the last 4 times it was 24 cents. 24, 24, 24, 24. All right. Looking at the EPS, it looks like the last one dropped down significantly. The EPS was 19 cents. All right. Now let's go back to the 10-year weekly chart, so we can see that they had a 10-year high of $79.40, 10-year low of $4.44. $4.44. Now I'm going to use this trend line tool. That 10-year low was in 2020. The 10-year high was in 2022. And that percentage gain opportunity was over 1,000%, guys. 1,076.3% over a matter of 819 days. So a little bit less than 2 years. No, that's not less than 2 years, is it? 365. No. Let's divide that. Let's divide that up. So 819 divided by 365, a little over 2 years. So about 2 years and a quarter. So about 2 years and 3 months. That was that opportunity of over 1,000%. So that's how we did that. Now, it was on a long-term downtrend this way. Come on now. Don't do that. Don't do that. Don't you do it. Don't you do it. Long-term downtrend. Then it dropped down. Boom. Caught that bottom of $4.44. And then it looked like it went sideways for a while before it just took off. Okay. It went sideways before it did that. And then it's kind of been on a downtrend for the most part, guys. And then it looked like it found consolidation in 2025. So I'm seeing consolidation here. This was like a sideways trend. And then here it was like a sideways trend. And remember, after consolidation, it's either going to break to the up or the down. And there it broke to the down. And then over here, same thing. It's going to break to the up or the down, but it broke to the up. All right. So that's what I'm seeing on the 10-year weekly chart. As far as support and resistance, I'm seeing some on the weekly chart back here. Get that off. Go here. Put me back on the screen. Would you come on? There we go. All right. Put me back on the screen. Price level. I'm seeing here, I'm seeing like a zone-ish situation. Seeing like a zone. So we're going to use the rectangle tool. So this candle, I'm kind of eyeballing it. So we're going to extend this over to 2026, December 1st. And then we're going to take this back 1 year to December 1st. And there's my support and resistance zone. So we can see that the price responded to it here. Here. It found support here. Both of these. Support. It responded to that price level here and here now. Okay. But it's holding on by a thread, like right above that support zone. Okay. So that's what I'm seeing as a support zone. Here's something else I'm seeing as resistance. So if I put this back on, I'm seeing resistance here. And it failed to kind of get there here. It didn't even reach it. It didn't quite reach it. And I'm looking to see if it was a zone I'm kind of missing up in here. But we kind of eyeballing it. So we're not going to do a zone. We already over 12 o'clock tonight. But you get the idea. This area, these long wicks went below it, but it was able to close near that area. That it held that support here and here. It responded to it here as support and resistance. Here it responded as resistance. And then it wasn't even able to reach it here recently, but it came near it. So that $53.40 I'm seeing as an area of resistance. This zone I'm seeing as an area of support. Now, if it was to get below that, it looks like a few of these candles are responding to a price level right up in here. So I'm gonna use a price level right here. There's some candles above it. There's some candles below it. You can see over here it caught it. And over here. So I'm not just, you don't know it. It's a few things that's making me look at that price level. So let me take me off the screen and show you what I mean. Back here, now we're still looking at the 10-year weekly. So it responded to that price level here. That candle definitely came down and tested it by itself. It held as support for a minute here. Then it turned into resistance. So you got it over here. It's a few times it was responding to that price level. It's not just over here that I'm looking at. It's not just here. I'm seeing this historically being a price level that it has trouble with or responds to. Let me say it that way, that it responds to. And I didn't take me off the screen for you to be able to see it. Come on now. Come on. Take me off the screen. Here we go. So you can see it. Okay. So that's why I'm picking that as a price level. So that's our support and resistance that I'm seeing on the 10-year weekly chart. So now we can go back to the 1-year daily chart. And now we can see that our levels are pretty much done for us already. These are day candles now. And now we're going to put the price levels here so you can know what the price levels are for the top and bottom of the zone. So the bottom of the zone is $42.95. The top of the zone is $45.55. Okay. So what I'm going to do, I'm going to go ahead. I'm not going to remember these price levels off the top of my head. So I'm just going to put them there first and then we'll correct them. So let's go here. Edit properties. $42.95 is the bottom. $42.95. Edit properties. Price level $42.95. Bam. We got it corrected. Hit OK. Now, what was the top one? The top one was $45.55. $45.55. Price level $45.55. $45.55. Bam. So there's our top and bottom of that support and resistance zone. Now, here is today's candle. Put me back on the screen. Here's today's candle. This green one right here. Extend this a little bit. Extend this a little. Okay. So we have our support and resistance right here. This is our 200-day simple moving average. This is our 9-day simple moving average. This isn't quite a hammer, but this long wick in the recovery within that support zone. And is this a small gap? That looked like it might be a small gap between, yeah, it's a gap between the red and the green candle. Now we won't be able to see it because we already have this other shadow there, but I'm gonna put it there. So this would be where we would, which one would this be? Rectangle 1 or rectangle 2? That's the wrong one. And let me show you how I know that's the wrong rectangle. The price levels. We know that 42.95 is the bigger rectangle. So that's how I knew that. So we need rectangle 2. Yep, there we go. So we want to make this yellow. We won't, we will be able to see it. Good, they put it on top. So what we're going to do, we're going to extend this gap over to December 1st, 2026. December 1st, 2026. Click OK. Wait a minute, what's going on? Oh, it didn't reset, because I'm like, that didn't look right to me. Maybe that was the wrong one. Here we go. All right, December 1st, 2026. There we go. We extended it. All right, zoom out. We don't have to zoom out. Let's go ahead and do our stock quote for the ticker DVN. Let's go ahead and go to that. All right, so Devon Energy Corporation opened today at $44.95. They had a high of $47.18. They had a low of $44.94. They closed today at $46.60, and that was a trading range of $2.23. Trading volume, they traded 20 million shares of this stock today. Now, let's find out what their average trading volume is. So we take off the floating data box, take me off the screen, and we're going to go over here to the volume label. So the average trading volume for ticker DVN or Devon Energy Corporation is 10.5 million shares in a daily trading session. So today they did 10 times that. So that's definitely an increase in volume above average. Also, they did about 1.5 times that on Tuesday, this red candle right here. So what makes this significant? Well, I'm glad you asked. What I'm seeing is that you have an increase in volume on the bullish candle. This red candle had lower volume, this one right here. So you had less people trading it here than you had trading it up here. More people were interested when it was bullish than when it was bearish. This is how volume incorporates in. So you can see how that matters. You can't, I don't know why people just be talking about the patterns and they don't be factoring the volume. That blows my mind. Put me back on the screen. Let's finish this volume conversation. So out of the most recent 252 trading days, guys, only 14 of those days had higher volume than today, this green candle. And remember, this wasn't even on earnings. They didn't even have earnings. They had earnings back here. What date is this? I don't think they're going to let me mouse over it because we have this drawing here. Yeah, they talking about, yeah, they have it down at the bottom. You see that earnings? So the earnings were on May 5th. That was May 5th. Okay, now we talked about the days above, days below. So the volume rank percentile was 94.4%, which means today's volume was higher than 94.4% of the most recent 252 trading days volume. Bam! Oh, guys, we got through it. Let me zoom out a little bit. Yep. All right, so we got our technicals. I gave it to you. We got it. We talked about it. All right, let's move on. Let's get ready to wrap the show up. Thank you guys so much for tuning in. Whew. I appreciate you so much. You already know. I hope that you learned something and I hope that you earned something. Thank you guys for joining me tonight. This Sunday, June 14th at 9 p.m. Eastern time, we're reviewing this week's performance of the 11 sectors in the S&P 500 index, companies that stood out, notable market news, and performing a live Q&A so we can focus on building our community. And make sure you keep tuning in weekdays following a market trading session at 11 p.m. Eastern time. Take care and God bless.